Hello, welcome back to the channel. It's that time of the week where we'll go over the watch list, we'll cover some analysis, and we'll go over what trades we are looking at this week. So we've got some contrarian trades mainly, which I'm not sure I'm ready to jump into straight away. So you can see we've got the US dollar CAD and euro dollar here. So we'll start with your US dollar CAD. Now, I've been speaking about this asset for quite a while, and basically the point is looking at our major level of resistance we've got through here. Now, this is obviously a major level through the daily time frame and the weekly. However, we've been waiting really for a catalyst to get into this market because the US dollar has been on a tear. We've seen oil prices pretty low, so it's been quite an easy ride to the upside really on dollar CAD. However, maybe the time is coming or has already come to possibly get short. Now, the catalyst we saw last week was the Canadian unemployment rate staying at 6.5%. Now, that's relatively stable. You know, it's not the best, but it wasn't an increase and it beat the expectations. So we've got a stronger Canadian dollar, or a factor for a stronger Canadian dollar. We've got oil prices that have potential to bounce off our support down here. We can see I'm actually using the Bollinger Bands on this and the way I'm trading at the moment, just so I can sort of visualize sort of the market situation and show you that again, you know, I'm going to say the word oversold, but you know, that use that term loosely. Markets aren't truly ever really oversold, overbought. But in this situation, again, it helps visualize that. So the reason for this trade, expectations for US rate cuts and stable oil prices present an opportunity for short USD-CAD position. Particularly if economic conditions favor Canadian dollar over the US dollar, the potential tightening of Canadian monetary policy compared to the Fed's dovish under Trump fiscal spending policies supports Canadian dollar strength. So we've got that on our side. The problem is, again, you know, we are still seeing the dollar continue with its sort of rampage to the upside. There's not really an opportunity to go and sell the dollar right now. Now, again, we can see the US dollar CAD on the Bollinger Bands is technically an oversold state. So it's a case of waiting. Now, I am ready to go short, but I'm not happy to go short, if that makes sense. It's a case of I need to see some sort of confirmation, whether it's a daily bearish engulfing candle, whether it's some more news to either negatively impact the dollar or positively impact the Canadian dollar. There's definitely some potential here. So I'm looking to get short, but again, it's not an immediate trade. It's possibly one for over the next couple of weeks when we've seen sort of the US news digest, and obviously we've seen a bit more of what Trump wants to do. Now, next up, we have got gold. I think gold's on a lot of people's watch list. It has been all year, really. It's been a big focus because it had such an unprecedented run, really. And a big factor for, you know, gold going up was global tensions. Fears around the election, and of course we've got global rate cuts essentially, obviously except Bank of Japan and Bank of Australia. So there's been sort of a sentiment within investors to put money into a safe haven, obviously gold. Now what we've got is sort of a few of those layers starting to unpeel. We've obviously had the elections. We know that Trump's going to be in power. And what we've also got with Trump is that narrative of, Russia wouldn't have invaded Ukraine, Iran wouldn't have done this, Israel wouldn't have done that under my power, So it's a case of will investors see Trump as sort of a way out of the global tensions? I don't know. I'm not here to try and predict that right now. We might see that start to unfold possibly in Q1 2025. So I do remain bullish on gold for now. So the reason behind that is gold remains attractive due to safe haven demand amid election uncertainty and potential inflationary pressures from Trump's fiscal spending. Increased government spending and geopolitical tensions are likely to elevate gold prices further, as rising inflation expectations drive real interest rates lower, benefiting gold. So there you go. We are still in the Fed cutting cycle, although we had a 50 basis point cut followed by a 25 basis point cut. They're relatively on target. You know, we are still in that cycle. And again, you know, that relates back to the Trump situation I was just speaking about. We don't know for sure yet. That's just sort of a theory that I've got. Again, that will more play towards the start of next year rather than now. So immediately on gold, again, my bias is continuing to be to the upside. So what we're seeing on the daily time frame is pretty simple, really. It seems like we saw a lot of profit taking. We obviously saw a lot of dollar strength, obviously pushing gold down. However, what we've seen is gold relatively respecting structure, continuing to respect structure. We are, haven't broken this uptrend at all, really. So now it's a case of trying to get in somewhere to buy. The problem that I see right now is we've created sort of a lower high here, and we have rejected, kind of off this trend line, not perfectly, but in my eyes, price action is never perfect. So we have then gone and created a lower high. So I need to see how price reacts around this previous low. If we can break below and then form another lower high, that might signal to me that, the trend is changing a bit faster than I anticipated. However, if we can come down to this low and reject again and form a double bottom, that then might be the opportunity to get into some gold long positions. Although my target of 3,000, I'm sort of now on the fence a little bit. I'm not 100% sure I still want to target up there. However, obviously in the short term, we can always have a target there. And if it doesn't get hit, we can close out manually. And if it does, then great. Next up, we've got the Australian dollar against the New Zealand dollar. Now this trade looks pretty nice on this H4. So, the way I trade, we look for pullbacks within the trend. We can see overall this market is still moving to the upside. I mean, it's had some ranging periods, which I don't like. But again, if we sort of zoom out a little bit, we are still on an upwards trend. We've got the RSI about to come into an oversold level. We've got price just coming down into our 200 moving average as well. So the fundamental reason for this trade, we've got diverging monetary policies between the RBA and the RBNZ, which are the central banks for Australia and New Zealand, present an opportunity for a long AUD-NZD position. The RBA's relative stable outlook compared to the moderate dovish stance of the RBNZ suggests a potential upside for AUD over the New Zealand dollar. Additionally, Australia's diversified exports base compared to New Zealand's reliance on agricultural goods gives AUD an edge. Now, just to expand on the agricultural side a little bit. So this is essentially what you see when I bring up these points, whether it's, the fundamental basis and sort of the trade idea reasonings. It's from our private research on the Elite Traders website. It's only accessible to members. But we also give individual research for each currency and sort of the commodities and equities and things. So if you want access to profitable signals with professionally written trade ideas to back these trades up, and to learn real trading standards with technical analysis and geopolitical and macroeconomic education with our videos and PDF resources, live webinars, and our proprietary research documents sent directly to you, then you can join our private Discord at elitetraders.io. Anyway, back to the video. This is another section. This is just from our agricultural section. Agricultural commodities are influenced by global trade dynamics and weather patterns. With Trump's re-election, potential tariff changes could impact demand for key agricultural products, including soybeans, wheat, and corn. Weather conditions, particularly drought or floods in major producing regions, add to the volatility of these commodities. Rising input costs, like fertilizer and fuel, also affect production levels. Consequently, supply chain disruptions have further complicated the disruption of agricultural goods, making the market prone to sudden price spikes or declines. A shift towards biofuels could also drive up demand for certain crops, adding another factor influencing agricultural commodity prices. Now, if we take away the Trump factor of that, about the potential tariffs, which he has spoken about, that could also then obviously affect the agricultural market, then impacting the New Zealand dollar. So that's kind of two factors we've got there playing for this trade. We've got the central banks and we've got the agricultural commodity side of things. So essentially, I'd be looking to go long pretty soon, actually, within sort of the moving average zone we've got through here. Now, for stop loss, we could either go pretty safe, so put it below these sort of double bottom around here at 1.09615, or we could go a little bit more aggressive and have a stop loss just below these previous lows here. Now, in terms of take profit, this would be quite happily up at the previous highs, and this was give us a 1 to 3. So I think this trade so far actually does look quite promising. So we've got the weekly time frame also bullish here on the 200 moving average. You can see prices above that. We can see on our Bollinger Bands here, we've got prices again above our 200 daily moving average, but the Bollinger Bands don't come into play on this one. So I'm just going to put this back to how it normally is. Now, of course, the Friday's daily candle was very bearish, so we do need to account for that and play this safe. And we do have the hourly time frame that is in a bearish trend, so we need to obviously play this one safe. It's not an A-star setup, if you will. It's more of a just test and see if we can get into this, maybe a low risk initial position, then we can scale in afterwards once we see the momentum in our direction. Now, the pound yen is the next setup I am actually very interested in. So the reason for this one, despite improved sentiment for the GBP due to fiscal stimulus, broader uncertainty surrounding Brexit negotiations and global risk aversion favor the yen. Japan's status as a safe haven currency makes it attractive during periods of heightened market risk, which could put pressure on the pound yen. If risk-off sentiment increases, driven by global uncertainties or economic setbacks in the UK, JPY is likely to strengthen against the GBP. So there you go. Sounds like a pretty straightforward trade. So take profit would essentially just be back down at the support, which would be the previous lows. The technicals for this actually do look quite supportive. So again, we've created, the high here, which was before we saw the carry trade unwind, this sort of flash crash we saw within the markets when the Nikkei dropped 30% or 40%, I can't remember off the top of my head. Since then, we've come down and created this lower high, and this obviously lines up with our trend line. We continue to respect this level. We've had a daily bearish candle on Friday, so this does look quite good. The weekly also does look quite convincing. Again, we could quite easily see price move lower, and this is just based off the technicals for now. The problem is the pound is in a strange position in my eyes. I would need to see some more data come out to really support this position. So what I would ideally plan to do here is enter this trade with possibly half risk, go in obviously low risk as I just said, and then potentially scale in if we see more catalyst to support this trade to the downside. What the main issue is really though, however, if we look at the yen is continuing its decline to the downside. We are seeing pops to the upside, but overall the yen sentiment seems quite bearish at the moment. Now, to support this trade, if we have a look at the COT data, so if we look at the pound, we've seen a decrease in long contracts and we've seen an increase in short contracts. The issue is we've seen the same thing with the yen here. So we can see we've seen a decrease in long contracts and a heavy increase in short contracts. So that's not really that convincing. So if you watched last week's video, I did speak about this, and I said, we'd need to see the COT data change as well, which we haven't seen yet. So I'm still waiting to obviously see the smart money change into this direction also. Now, euro dollar is where it gets a little bit more interesting on my front. So you guys should know I've been very short pound dollar and euro dollar over the past couple of weeks when we've seen the dollar obviously have its rise, its glory period. And that was, pretty easy trades really. It was essentially free money. However, this might now be changing. So if we go ahead and have a look at the edge finder here, euro dollar here was on a bearish read and it's now flipped onto bullish. So it's got a score of 5. So that's one confluence to go, well, to potentially start looking to go long on euro dollar. Now, if we back this up with some reasoning, if the Federal Reserve maintains a dovish stance and the USD weakens, the euro could gain traction against the dollar. The European Central Bank's continued support for economic recovery with the Eurozone also provides a supportive backdrop for the euro. Although the Eurozone faces challenges, the weakening USD and accommodative ECB policies could result in a favourable setup for a long on Euro USD. Positive developments in energy supply or fiscal policy among key Eurozone members could further bolster the euro. So again, this isn't a clear-cut trade. It's not a case of, just buy here and it'll be fine. But there's potential there for this trade to actually start heading back to the upside after we've seen such a huge decline. So if we look on our H4, what we've got here is a very clear double bottom. Now, obviously, this isn't enough really to start buying euro dollar, but it's definitely something that we can, keep into account and take into mind when we are when we're looking at this market. So if we can potentially start coming up and creating higher highs, so if we can break our previous high here, create a higher low, and start seeing this trend slowly change, that might then be the sign that we could start going long on euro dollar. Now, again, what we've got to keep in mind is we've got the US dollar continuing to head to the upside. This isn't a trade we want to get into straight away when markets open. There's actually no trades I'm interested in taking straight away. Next, we've got the NASDAQ. So the NASDAQ has been, in fact, all the indices, so US 30, S&P 500, the NASDAQ, all been on a huge ride to the upside. It's been, again, very easy money for the bulls in these markets. However, this might not last too long. And the reason is the NASDAQ index faces regulatory pressures under Trump's administration, particularly concerning antitrust issues and scrutiny of big tech companies. Elevated evaluations and potential tax policy changes could lead to a correction in the index. Now, again, you know, like I said, I'm not looking to take this straight away because, you know, look at this market. It's just there's nowhere really to sell this right now. And I actually don't sell the indices. Anyone that again watches my content regularly will know that. However, it's something that we can obviously keep in mind when we are looking at this market. So the key sign really obviously is to hear what Trump says. So that would be the first thing. And then we'd also need to see this market start heading to the downside, lower highs, lower lows, and start, you know, forming that sort of downtrend that we might be able to capitalize on if the reasoning is strong enough. So that's it from me this week. I hope you guys have a great week, and I hope you've had a good weekend. Please like and subscribe. If you want to join the Discord, click the link in the description. We currently have 50% off for Black Friday, and hopefully I'll see you in there. Speak soon.